Hi everyone, Erwin here from the Truth About Real Estate Investing Show. Normally we have an episode, but our guest asked for a postponement. And also there was major news, if you didn't already notice, the Bank of Canada announced that they were going to hold rates this week. We're going to talk about, we're already in an economic slowdown and the recession is basically inevitable. So let's go on to see what's going on in the world today. So Doug Ford and the Premier of British Columbia, they both wrote letters to the Bank of Canada, Tiff Macklin, to ask them to hold rates steady. If you had the time, it's actually kind of funny to read Doug Ford's letter. He actually states in it that these high interest rates are making housing less affordable. It's actually kind of funny. It's kind of the destruction of the middle class caused by all this money printing by our federal government and cheap interest rates that actually cause housing to be so unaffordable. But I digress. So if you missed it, Bank of Canada held steady just this week, and they've done 10 successive rate increases, which is the most in history. So what's happened since all these rates have gone up? Economic activity, so this came out only just last week from Stats Canada. Economic activity actually declined in the second quarter of 2023 by 0.2%. They also had to change their original revision. They had to change their growth projection for Q1. They actually revised it down from 3.1 to 2.6 for this past quarter, for past Q1. This is all from Stats Canada. The quarterly slowdown is largely due to declines in housing investment, smaller inventory accumulation, as well as lower exports and household spending. Also, there's things going on in the world. China's economic slowdown, and we have these wildfires going on in Canada. None of these things bode well for our economy. The housing investment decline was led by a sharp drop in construction as well. Again, from Stats Canada, and there's going to be a 50% chance of a rate increase by December. The next meeting is October 24th, don't quote me on that, but it's late October, next meeting. There's basically a 50-50 chance whether or not we're going to see a rate increase by then. So, and then of course, if you follow rates as closely as I do, the markets are expecting a cut, the first cut to be in June of next year. So what's going to happen? If you read the press release from the Bank of Canada, Tiff Macklin is still leaving the door open for more potential rate hikes. And also understand between now and October, there are 2 more release cycles of jobs, inflation, retail, and GDP numbers for both July and August before the Bank of Canada meets again on October 25th. And then they'll decide from there. So again, I track interest rates a couple times a week. So this is from the Montreal Exchange, the Canadian interest rates expectations. You can see by December, so it's basically a coin flip whether or not we're going to see another interest rate increase or not, right? And then the expectation is that they may hold it, and again, you can see in June there's a chance of a cut of 25 basis points. Now, what's going on in real estate? This was released just this week. This is Toronto Regional Real Estate Board's data. It was just released on Monday, so this is really fresh data. So you can see the transactions were not for August, was not that dissimilar from last year. August is a bit of is usually one of the quietest months in real estate. August and December are usually very quiet, so it doesn't tell you a lot about where the real estate market is, but it tells you a little bit. Transactions, so number of buys and sells, were pretty close to last year, down 5%. That's not a humongous drop. Compared to July, it was pretty close. August sales transactions were pretty close to July of the previous month. And then of course, really interesting to me is to look at prices. Average prices, they held. They're actually up 0.3% from year over year. And then compared to the previous month, again, because August is a really slow month, typically cheaper houses or more cheaper houses sell in August. So prices are down slightly from July, but again, it doesn't really mean much because this is basically always happens almost every calendar cycle. You can see in the bottom left, total listings are way up over last year. More people are selling. And then also skip ahead to property days on market. So this is interesting. I didn't know this till recently. Property days on market accounts for a house's history. So say a listing's been canceled and relisted, this property days on market counts for all the days that's been available for sale. So you see the number currently is 28 days on market. So that's still extremely low, and that indicates still a seller's market. It takes only 28 days for a house to sell firm. on the trend market. So that's a pretty big area, a lot of data that covers. Condominium sales. I personally don't invest in condos, but I'm always fascinated to look at the data. You can see that August was actually very busy compared to last year for condo sales. Condo sale prices are down, which is not really surprising with with the way interest rates are. There are so many speculators who bought condos and are no longer able to hold them. They're going to take haircuts on those, especially since a lot of those properties negative cash flow. Listings for condos is actually down from Q2 of last year. And listings are way up. Days on market, still only 20 days. 20 days on market for a condo to sell. For a condo that actually does sell, that's still very, very low. Now, this is which really caught my attention. You look at the middle chart, you see a one-bedroom apartment, the rent is up 11.6%. Like, that is such sad news, in my opinion, for renters in the state of our society. 11.6% rent increase over last year. Very, very sad. Where are prices going to go? So I actually saw this article today. It obviously caught my eye since it's so negative. From BlogTO, home prices are set to plunge across much of Ontario this fall. Plunge. Now think about it. What does plunge mean to you? To me, that means like 5, 10, 15%. That's a plunge, right? And then you click on the article, you click on the report that's linked in the BlogTO article, and Remax's headlines are a lot more soft. Canadian housing market softening this fall due to inventory and interest rates. So let's actually go straight into it. So BlogTO said prices are plunging, right? So let's look at some of these numbers. I know I specifically said Ontario, but let's just go down the list. It starts off with the Greater Vancouver area. I'm always interested in what's going across the country. So they're expecting prices to come down 2%. Calgary's going to go up 4.5. That's a pretty big up bump, right? Edmonton, Saskatoon. I wanted to look at some of these Ontario regions. Durham region's expected to go down 5%. That's down quite a bit. But do understand that the Durham market went up something like 30% over the pandemic, right? A pullback of 5% is not the end of the world, assuming you didn't buy in the last 2 years. You see Collingwood's going to be up, which is surprising because it's such a vacation area. North Bay slightly down. Oakville's going to be up. Peterborough's going to be down 5%. It's an extension of Durham region in my opinion, so not a surprise, right? We have Sudbury's going to be quite a bit up. The GTA up 2.5%. Areas where I invest, for example, is Hamilton, down 2%. That's almost a rounding error to me. I'm a long-term investor, so for example, properties I bought 10 years ago have nearly tripled in value. So to give back 2% is not exactly a big deal to me. You invest for the long term, these things smooth out, right? Kitchener-Waterloo is expected to be down 4%. So no, there's no plunging here to me. I don't know. We obviously differ on our interpretation of the word plunge. Anyways, what's an investor to do? If you have cash, it's better to be buying now while the property market is balanced. I know I showed you some markets that regular residential markets are generally in sellers' favor. For investment property that are tenanted, it's actually more balanced. It's a much more balanced market where we're seeing 45 to 90 days on market. That is a balanced market. And if I was buying today, I would be getting a variable rate mortgage. I know some people might think that's crazy, but I'll be looking to lock in when rates actually start coming down in 2024 or 2025, right? The market, and then again, based on the market rate, based on what the bond market's doing, they're expecting rates to be lower by 1.5% by the end of 2025. And if you need to sell, this pause in rates is probably a really good time to do so. Remember, like I mentioned earlier, it's basically a coin flip whether or not the Bank of Canada raises rates again later this year. If they raise rates again, you're going to expect a very slow fall-winter market until the spring comes around. Especially, you may have to wait until this rate cut for a great liquidity event, as in a great market to be selling. Tenanted properties are harder to sell. I've been talking about that for a long time. We've given webinars on how to sell tenanted properties. So there's lots of warnings, lots of areas you can go wrong in selling a tenanted property. So make sure you use a professional, as in like a realtor, who understands, who should be a landlord themselves and understands how to work with tenants on the sale of a property. So what are our clients doing? Here's a data table that I assembled of what our clients were doing over the last 6 months. Majority of our clients have been selling more, doing more selling than they have been buying. So to dig into the numbers, just to give you an insight to what our clients are doing. So in summary, 0 losses, right? When they held, the average hold period was 5.2 years. So again, you hold for a longer period of time, you smooth out problems, you reduce risk. So over a 5.2 year average hold, assuming a 30% down payment, average ROI was $300,000. That works out to about 280%, or a 54% return on investment per year, straight average. Again, assuming a 30% down. So our clients are doing wonderful. These, to me, are world-class returns. And again, the source is our clients' own data. Right? So if you would like to continue on the journey to become, for your own successful investment journey, then we do offer educational events. We have monthly free online only real estate meetups. We have special guests. My team and I, we share both macroeconomics, what's going on in the world in Canada, and then also on the street level, like what are rents for current properties going for? What are the tenant profiles in the best neighborhoods for investment? And then also for in-person, we do on the street, in property, what we call a mastermind tour. So for example, September 23rd, we will be inside my client's triplex conversion. He took a large single family home and turned it into a triplex. We're going to be inside it. We'll have handouts. They'll have drawing schematics, the financials, and then myself and my team members will be there for you to ask questions on how to execute such a deal. And yeah, this is all educational. All the proceeds for the mastermind tour go to charity. If you'd like to follow along and receive notifications when we host these events, then join the 10,000 plus iWinningest, as I jokingly call, iWinningest investors in Canada. These are people already subscribed to our email newsletter. Simply go to our website, truthaboutrealestateinvesting.ca, and on the right side, just enter your information, click sign up, and then you'll start receiving our email notifications when we're having events. So you don't want to miss it. Again, our clients have world-class results, and I would love to have you among them. Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.